Welcome back. You're watching Stock Watch with me, Simon Brown. Joining me to take the stock-related questions tonight, Chantal Marx from FNB Wealth and Investments, Nader from Benguela Global Fund Managers. Please be sure, send through your questions. Email stockwatch@bdtv.co.za or SMS 41392 or on X using the hashtag StockWatch. Chantal, Grant, appreciate the time today. Chantal, let's start with you. Let's start with Calgro. We chatted about it on Friday a bit in the week that was. I think maybe even last week because the trading update had come out. We've now seen the results and got a sense of it. Anything further that we got from the results? I mean, certainly reading through it, they are optimistic about the future, I suppose we could say. Your take on it?
Yes, they are still optimistic around the future. I think that the specific set of results highlighted that this is still a cyclical company, right? So from a revenue perspective, things tend to be quite chunky. And I think that the disappointment with today's results, as shown in the market reaction, was mainly because of the revenue line being quite soft. What they managed to do, though, was complement that revenue that was lost during this specific period under review with their investments from associates. So JVs on the development side, that's starting to come through nicely. That actually makes me quite positive because it tells me that once that revenue line starts ticking up again, which we think it will over the next 6 months or so, if those investments from associates continue to grow quite nicely and contribute quite nicely, you could still see a really decent growth from the company medium term.
Grant, is this a stock you watch? I mean, it is small. In fact, I was going to say small cap. I don't think that Vickers would mind if I called him a micro cap. It is a small stock. Did you ever look at the numbers? Do you have a thought?
No, unfortunately not, Simon. I didn't get to that one.
No, that's fine. Then I'm going to come to you with a question coming through in the emails around Exxaro, looking for a 3 to 5 year holding period. Grant, let's stay with you on Exxaro. Is there value in Exxaro? I mean, we know that we're no longer at the coal prices we were during the pandemic. We know the transport issues. They've, of course, also got some iron ore. Is Exxaro on your list?
It's an interesting one because you need to really have a strong view on the energy outlook, energy prices. I think it's a cash generative company, and from that point of view, it's fairly solid, but I don't really see where the growth is going to come from. They clearly need to reinvent themselves. They're looking to grow into renewables or new energy type of thing, but they're struggling to find attractive prices. They've given up on looking at copper assets. So I think the corporate strategy is a little bit difficult at this point. I don't see clear execution and success there. So to be honest, it's one that I would probably stay on the sidelines for.
Chantal, Exxaro, I mean, coal is an old way of doing power, but it's still there and there's still a lot of coal-fired plants. And in fact, around Asia, there's a lot more still being built. Would Exxaro be on your shopping list?
So Exxaro generally isn't on my shopping list from a longer term perspective, although to be fair, they haven't really done badly over the long term because what they've done is because they have these assets that are kind of on the decline from a demand perspective, they've really focused on pushing shareholder returns. Cash returns in particular. So from that perspective, they've actually done quite well. But yeah, I mean, I think that the uncertainty around the thermal coal market going forward is still an issue for them because perception is almost as important as reality. And even though in reality, we still see demand for energy growing, we still see probably demand growing for coal-fired energy coming through from Southeast Asia, the perception is that you're in a declining commodity. So I think it's going to be quite difficult for them. Initial kind of returns from Synergy haven't been great, but I can see that improving as those investments mature. And then I think the iron ore will probably reduce cyclicality somewhat. But I think it's more a trading stock than a 3 to 5 year hold.
So then, Chantal, staying with you, you mentioned Perception, British American Tobacco. Question came through, done nothing in 5 years, albeit nice sterling dividend. Is it still worth holding?
So British American Tobacco has been so interesting because if you were talking to me 5 or 10 years ago, I would have said, well, this is a core portfolio holding. It's cheap as chips. You get a really nice big dividend yield. But they've gone on a very value destructive acquisition path over the last few years, Reynolds being the most recent. It's not that recent anymore, but their balance sheet is still highly geared. At the same time, you've seen continued volume drops from the traditional combustion business, which is the cigarette business, and new new products have done well, but I think it's still so unregulated, and competition is so strong, particularly from guys who are kind of smaller players in that space, coming in at really cheap price points, not necessarily having to test their product as rigorously as British American Tobacco. So yeah, I mean, I'm not a fan longer term, but we'll see how the new generation story plays out. I think once regulation starts picking up, a company like British American Tobacco can do quite well because they already know how to deal with a regulator. Their products are properly tested. They have ticked all the boxes.
Yeah, I take your point on that. And Grant, I mean, certainly I listened to a podcast a few months ago around the new age products in the US, and it is a bit of a whack-a-mole. Your take on British American Tobacco? As I said, I mean, a nice sterling dividend, but I don't know if there's much else there. Do you see much else beyond?
Yeah, I mean, the challenge is they're taking on a lot of debt to maintain that nice dividend. And so other than a rand hedge, it doesn't really have a lot of exciting prospects unless they can revive this new age prospect. I mean, these new products are actually growing like a house on fire. You just look around you at the youth. I think there's a long-term growth runway there, but it's not clear who's going to win in this game. People are looking at different products like tobacco pouches and things like that. So I'm not sure that British American Tobacco comes out as a winner, but I think that's if you believe in those new age products, you could maybe make a case for some long-term growth there. Otherwise, it's a very difficult product or business to get excited about at this stage, given the lack of growth and the high debt.
Yeah, no, I take your point. And that debt is, at least when Anheuser-Busch did it, they got SAB Miller. The British American Tobacco didn't get much. Grant, staying with you, Pepkor, question coming. Nobody mentions them when talking non-food retailers. Their Brazilian operations looking good. Is Pepkor worth a buy? Grant, Pepkor. They've also got their little flash business, which kind of sits hidden inside the broader business, which is really good as well.
Yeah, I mean, I like Pepkor. We think it's a decent little business. The Brazil operation is still very small in their lives, but they have quite a clear roadmap in terms of how they want to grow that. I think there's big potential there. It's not yet playing out in the numbers, but I think it will come. And then locally, I think they've got a good niche. They understand their business. They're looking at how to tap into the different verticals in and around the competition. So I like it. I think it will benefit from the two-pot system, from the improving environment, from the interest rate cuts, and all the positive factors around the SA macro outlook. So yeah, I think you can buy that.
Chantal, Pepkor?
Yeah, I think one of the reasons why no one's been that excited about Pepkor is because it was never really as cheap as the other non-food retailers in South Africa. So when we were looking for companies that will potentially get massive growth with the improvement in confidence that we're seeing and the tailwinds that we're expecting from a macroeconomic perspective, we were looking at TFG and Mr. Price because they were beaten down quite a bit. No one was looking at Truworths because they are a very specific set of issues facing that company. But Pepkor is a quality business. They know exactly what they're doing and where they're going. I think the initial feedback that we've gotten from management in terms of how Brazil is doing has been really positive. And I think if they stick to the plan there and they keep that local expertise on the ground, it could be a really nice new growth vector for them. That said, I mean, we've heard from ShopRite's management team that the SA market still has loads of potential. We've heard the same from Boxer. And I think that for Pepkor, there's also still a lot of growth runway, particularly if we get economic growth right, particularly if we can get more cash in lower income consumers' wallets.
Yeah, I take that. In the low-income space, there seems a lot of space still there. Chantal, I want to stay with you. Question came through around the best leisure stock. It's basically what? Sun International, Soho, City Lodge. I know you like City Lodge. Is that still your pick in the space?
So from a valuation perspective, absolutely, City Lodge is still my preferred pick. I think that there's been more growth momentum behind Sun International and Southern Sun in particular, because Southern Sun has really seen some decent growth in the areas in which they operate. So it's kind of more in the international travel, kind of high income travel space, and they've done very well. I'm not a massive fan of the gambling stocks right now. So Toho, I think, more exposed there, probably not one that I'm looking at the moment. Sun International, I think, is going to be really interesting if they're able to bed down that Piedmont acquisition, but there's execution risk there. So it would probably be Southern Sun, but the valuation is a little bit full for me at the moment. So I still see growth in City Lodge. I think it's early days for them in terms of really getting to benefit from domestic tourism continuing to pick up, particularly on the business side. And I think that they've positioned themselves well to also capture the international market.
Grant, have you got a pick there in the leisure space? And one area we don't touch on much is also car hire, which is, I mean, CMH has got a bunch in that. Of course, there's Zeda, the car company, not the agri company. Grant, leisure?
Yeah, I think it's a space that it actually does have opportunity. I would have gone for Southern Sun, but the last couple of months it's had a pretty strong re-rating. So it is getting on the expensive side, but it is one that if it pulled back would probably look quite interesting. City Lodge, I think, the debt remains a bit of a challenge for me. I think the portfolio is a bit old and tired. It's probably not the first one we'd go for, but it may still see some re-rating if the economy picks up nonetheless. So Southern Sun, probably the first one. Sun International, probably the other one we'd like, and City Lodge maybe third. CMH, yes, I like that one. I think it will benefit. And we're seeing the travel numbers grow consistently, especially in the Western Cape. So yeah, I think those car rental businesses will also do well, and it's not yet priced in, those businesses.
Chantal, would you add car rental into the leisure space?
Yes, absolutely. I think that these businesses will continue to benefit from an uptick in travel. It's not only international arrivals that aren't even at pre-COVID levels yet, but domestic tourism has also picked up quite meaningfully. And one of the things we were concerned about, let's say 3 or 4 years ago, with regards to car rental, was the impact that ride hailing will have on the rental market. But what we've seen now from a travel trend perspective is that people do want that freedom of having their own vehicle, and road trips, I think, are coming back in a massive way. So I really like the car rental space. Most of these stocks are super cheap. CMH is also going to benefit on the new vehicle sales side, with interest rates coming down, inflation coming down, and consumers feeling a little bit better about their financial situation. So yeah, like all these stocks.
Yeah, and there's so much, just the consumer feeling better, whether it be rates, inflation, whether it be two-pot, whether it be that my lights work 24/7, just changes everything fundamentally. Grant, let's come to you. A question coming through, and this is with a slight eye to the picks. Rhodes Food Group, and it was actually weird. I was having a conversation with my wife last night. You open our cupboard, and there's tins and tins and tins of Rhodes. I'm old enough to know that doesn't make it a good investment case. Is there a good investment case for Rhodes?
I think there is, and I think this is one that listed with a big bang. There was a lot of excitement around this management team, but it really got ahead of itself. Valuation got ahead of itself, and it's taken, I'd say, 6 years to digest all of that noise.
Yeah.
And this last year, you've started to see them really deliver. They've positioned themselves right up the food chain. So they used to be a lower value offering. They're more premiumized their products, and they're coming in at a price point probably 2 and 3 on the shelves. And I think they're gaining real traction, and they've done an excellent job. And I think this one's going to continue to deliver.
Chantal, Rhodes Food Group?
Yeah, I mean, they've made several bolt-on acquisitions over the last few years, and they've actually managed to bed them down quite effectively. So I think we're now at a point where the valuation has started reflecting the reality on the ground and not the excitement around bully beef. And I think that there's still so much growth in the categories that they now have kind of bought exposure into, pies being one of them, and herbs and spices being another. And then, of course, the kind of the core fruit and vegetable canning business, I think, doing very, very well. We're looking at kind of a market share of second and third, perhaps first in certain areas. The juice business adds another kind of flavor and diversification to the portfolio. I think the only thing we need to be careful about is the international business. They have a sizable export business on the deciduous fruit side, and that does tend to be quite volatile. But I think you almost need to look at it the way that you look at AVI's I&J business. Some years it's for you, some years it's against you, but the core of that business is really solid, and I'd be a comfortable long-term buyer and holder of Rhodes.
Actually, I like that analogy. It is going to fluctuate, and it's very much I&J in many senses. Afrimat, Chantal, we chatted again last week that was Afrimat. The update wasn't necessarily a big surprise, maybe a little worse than some had expected. Question is there opportunity here on that update? You perhaps had some reservations.
Yeah, I mean, so I think that there is opportunity because we do see construction activity picking up over the next few years. Gross fixed capital formation is expected to be quite supportive. So I can see I can see construction materials doing well. I can see the cement business doing well if they are able to turn around that problematic factory, because I think that that is going to be a huge thing for this management team. They've showed in the past that they are really good at doing this type of thing and making these sorts of acquisitions and extracting value for shareholders, but it adds execution risk to the name. On the iron ore side, I think that we could start seeing things grow a little bit more supportive if the China stimulus measures actually amounted to meaningful resumption in growth in that country. One of the concerns I have there is ArcelorMittal and the future of ArcelorMittal, because we saw that one of the big impacts on their results this specific reporting season was that furnace that went cold at ArcelorMittal. So there are some question marks there. I love the management team. I think they are excellent capital allocators, but it could be a bumpy ride for the next 6 months.
Yeah, I mean, they are great. We take nothing away from that, but Lafarge might be a big bite. Grant, your take on Afrimat. Certainly, our president talks about making the country in a construction site and the like. A lot of bulk materials in there. Is Afrimat on your list?
Yes, it is. I think it's a high quality management team. They've got a really good track record, and I think this Lafarge is going to give them some optionality, which you're not seeing in other spaces. It is loss making, but I think it's good, and I think if anyone's going to turn it around, it'll be this team. So I like that perspective. I think iron ore does appear to be stabilizing. There is potentially some recovery in that space, especially as they're to the low end of the cost curve on some of these miners. So that should support that. And they've really got good execution. As Chantal said, in the cement space, you're seeing improvements there, the aggregates. So they know the space, they know the business, and their track record suggests that this is a good one to hold if you think things are going to get better in SA and globally for that matter.
Chantal, you mentioned ArcelorMittal. A question come through. Stock has run hard. I'm looking at the chart. It's up. Quick math. My math's not so quick, also smart. It's up a third, maybe 50% in about 3 weeks. Is there opportunity in ArcelorMittal? Is there something happening that sent this stock to 1-year highs? Or is this really just the punter's dream? Because as soon as I zoom that chart out, the picture gets less attractive.
Yeah, absolutely. So I do think that they have a relatively undemanding base for the next year, because you had that blast furnace that ran cold during the period. So production will be meaningfully better. I think there's a case to be made for the external environment improving for them from a South Africa domestic steel demand perspective. I am just concerned that they are keeping open a loss-making business in Newcastle, so that could be an issue for them going forward. And I'm not sure if they are truly competitive in the global sense. So I think perhaps ArcelorMittal will be on my trading stock list rather than long-term investment stock list. But yeah, I mean, probably ran really hard over the last few weeks, so I wouldn't be interested right now.
Yeah, and actually, and then I just zoomed that chart out even more, and I'm old enough to remember that if I could go back more than 10 years, sure. Grant, ArcelorMittal, I mean, I mean, it can't be a buy and a hold, I'm sure. Has it got some opportunity at this point?
Simon, I'm like you. I'm also old enough to remember a lot about this company, and it's not one that would be on our radar. I think the risk there is too great. By all means, trade it if you like, but certainly it won't be one that we would be buying into the portfolio.
What about Montauk Renewables? I'm not even sure if I'm pronouncing it right. Montauk. It spun out of HCI. I remember at the time, I thought nothing of it. It did great. It seems to be highly volatile. Grant, is that one you've ever had a look at and think there's opportunity?
I had a brief look and struggled to understand the pricing structures in the US and the regulation, and I just found the complexity wasn't worth the risk. And the volatility is evident, as you said. So no, I can't profess to know it well, and I can't say that it's top of the wish list either.
I remember that was it. I ran into trying to understand the regulations, and that got my brain hurt. Chantal, have you got any further insight?
Yeah, I mean, so if you look at the nuts and bolts of it, it's actually a great business because it's in the renewable space. They're basically taking trash and turning it into electricity. But the pricing involved is very, very it's very complex. We tried to look at it by following the Henry Hub gas prices, but the stock doesn't move in line with that, and profitability doesn't necessarily move in line with that. So it's incredibly tricky to forecast cash flows for this company, and that is why I think it's trading the way that it's trading, because no one really knows. And that makes me uncomfortable from a long-term investment perspective, and even from a trading perspective, because the swings are so massive, up 9% the one day, down 7% the next day. And you never know what the exact catalyst of that is, because it's certainly not the gas price.
Yeah, that just is it. And regulations they can create complexity. In this case, they certainly have. A question came through on Equites property fund. Good results, lagged this year. Dividend yield of around 9, discount to NAV of around 15. Chantal, they had some UK challenges, but they are a pure logistics, and I almost want to say sort of high-end logistics, not the old-fashioned warehouse with cardboard boxes. And it has lagged. Is the opportunity here in a stock that has lagged?
Yeah, I mean, they're definitely in a niche space. I mean, we would kind of put them in a niche box with storage, because it's completely different to the rest of the SA listed property sector. I think the reason they've lagged is that there's been a break in trust with the management team following that disaster in the UK, and kind of a massive, very quick pivot out of that UK strategy. But the assets that they have in South Africa are really good. Their pared back UK strategy, I think, is a lot more solid and realistic for them. The yield is about 9.5% forward at the moment. So it doesn't look very cheap, but it doesn't look very expensive either. I would be comfortable to include the stock in a diversified portfolio, but I do think that they could lag for a little while longer because of the trust deficit with management at the moment.
Yeah, I take your point. Grant, I mean, I think last time I checked, local REITs were up 35% for the year, 50% since the lows of a year ago. Equities certainly lagged. Is it something you would put into a portfolio?
Look, it is a quality business, so it is something we would look at. I think their foot fault in the UK definitely hurt sentiment. There's been a derating of the share, so you might see that change. It used to be a premium rating relative to the rest of the sector. They hold a long-term quality portfolio. I don't think they're going to get the same gearing to interest rates, given that they are matched and longer term in their leases. But it's a good business. I think you can hold it if you're a yield investor or looking for some property to potentially revalue. But yeah, so we like it.
Yeah, and I take your point. With rates lower, government bonds lower, there is now that search for yield, and REITs pop in, and a 9.5 isn't bad at all. Let's go to some stock picks. Chantal, you're going with Bidcorp, who really are, I was going to say a small little business. I take that back. A big business that really just sort of get on with their knitting.
Yeah, a big business with lots of small little businesses that are all almost exactly the same. So a really large business in the food services side of things. So they basically provide food and beverages to restaurants, hotels, catering services, and conferencing facilities. And they have been doing that for decades, and very successfully, not only in South Africa, but across the world.
Yeah.
I think that there are some decent economic growth tailwinds for the world over the next few years. I think that there's a decent shot at recovery in the UK as well as in Europe. And if we can get consumer confidence picking up in China, which I think authorities there are really pushing hard, that business could provide a further supplement to what we already think is a good kind of returns environment for Bidcorp. They did so well over the last 6 to 12 months while China was slowing down, while interest rates were high. I think with these tailwinds, they can just build on that momentum that they already have in place.
Absolutely. And I like your point. It's a lot of small businesses which are all the same, but kind of in different places, and a great looking chart at the same time. Grant, you're going with CA Sales, really newish to the JSE, came out of PSG. The story behind CA Sales.
So yeah, it's a great little business. It's not a new business. They've been around since the early 2000s, and then 2011 reformed and then listed in 2022. They are basically warehousing, logistics, and retail management business for all the brands and staples you can imagine. They've got Heineken, Diageo, Coke, even Tiger brands listed among their customer base. And they service Southern Africa, so all our surrounding countries, Zimbabwe, Botswana, including SA, and the informal sector in SA is a big growth area. So they make sure that the product gets to the stores, it gets on the shelves, they manage where it sits on the shelves. So they really operate like a consumer staple They've got a long track record of good relationships with these guys, and they've got a strong niche, and they're building and they continue to grow by small acquisitions. You can see a long track record of growth, good and growing returns on invested capital, and growing profits. It's a wonderful little business, and I think you're getting it at a deep discount to your average consumer staple. So it's a consistent compounder, as we like to call it, in around the low to mid-teens in terms of multiple that you're paying. And so I think it's a great little opportunity into an economic recovery.
Yeah, and again, a nice looking chart. I like those charts. Bottom left, top right. Give me lots of those for breakfast and I'm a happy man. We'll leave it there. That's all for tonight. Thanks to our guest, Chantal Marx, FNB Wealth and Investments, going with Bidcorp. Grant Nader from Benguela Global Fund Managers, going with CA Sales. Up next, The Close. Stay tuned.